What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is September 6th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we've got a wide range of topics to focus on for the update. To start, though, we're going to take a look over Bitcoin's price and talk about a potential inflection point that might hit over the next week that will lead Bitcoin's price to either having a major breakout to the upside or a major breakdown to previous levels of support. And I'm going to be talking about my rationale as to what fundamentally is going to drive price to the upside or to the downside as we correlate through a very key but simple technical indicator, and that is the price wedge that we've been building up throughout the entire summer. And then outside of that, in the sense of traditional markets, we're going to be talking about China and how it is yet again finding ways to devalue its currency, and it's using an old trick in the books: fractional reserve banking. So we'll talk about that as we go throughout the video. But I want to let you all know as well, towards the end of the video, we have a sponsored interview with Jakob, who is the founder of Hubii, which is a company trying to build a variety of interesting technical solutions. But more predominantly, they're building a really interesting scaling solution called Nami, which is currently an Ethereum scaling solution, a layer 2 solution. But we'll also be talking about how they plan to scale to other blockchains and bring both scalability in its full entirety as well as interoperability. So I 100% recommend you guys stick around for it. It's going to be an exciting one. You won't want to miss it. But anyways, taking a look here over the overall market, it seems like things have flipped over the last few 24 to 48 hours here. We went from, again, most of the market being in the red to, again, cryptocurrencies starting to turn to the upside as Bitcoin has started to charge up towards the upper range of $10,000. And we're now starting to get, I think we recently set a price range around 800 to 900 or 10,000. 800 to 900 here for Bitcoin. So yeah, across most exchanges, again, pushing up towards 10,900. Taking a look here at overall market capitalization on the yearly chart here, again, we're starting to charge back up. I really think, interestingly enough, if you notice, we found support range at a very similar range here at both of these two times where we really saw a low on market cap. So I think, again, that there's not much of a chance that we're going to go down here unless, again, we have a disappointment in the thing that might lead us towards a breakdown. And we'll talk about that as we go through the TA segment here. But so far, the chart is looking very nice. Support at a similar range. Price is curving up here. Again, we got the 30 to 40% correction that we were expecting. We could go down to have more of a correction, but the chart isn't saying that right now, right? The chart's showing in this case with a double bottom that it's probably time for it to move higher. And again, if anything, there's a chance that there's a triple bottom, which means that we're probably going to come back down to the same range here for overall market cap, right? So if we take a look here, dominance, again, Bitcoin charging forward slowly but steady here. Again, breaking out here, gaining about another percentage point over these last 3 to 4 days as we broke through the 70% mark, which was previous resistance back here. Again, other coins just getting crushed here. And you're going to see a lot of value falter out of other coins because, guys, this is where we're adding in hundreds of different, technically on CoinMarketCap and most coin aggregate sites, thousands of different cryptocurrencies, most of which are not traded on real exchanges, don't have any real liquidity, and they're finally either A, getting filtered out, or B, again, whatever people own some of these coins, they're dumping it on whatever exchanges they can actually sell it on to make as much money as they can. And there's not much liquidity, so that valuation drops quite quick, right? That's the thing to take into mind. And I'm not talking about large altcoins. I'm talking about like a lot of small cap coins that have inflated market caps that really don't have any real volume, right? And you guys know what I'm talking about. You've seen them on CoinMarketCap. It's quite a cancerous problem, I think, in the space. But anyways, to take a look over the cryptocurrency market at the moment, we can see Bitcoin doing very well here over the last 7 days, up almost 14%. And really, as we take a look across the board, it seems like most cryptocurrencies, excluding a few players like Binance Coin here, that are really leading the market, are really at the moment in the green. But I gotta say, the one that's really stood out to me is Monero here. Monero up almost 16.5% here in the last 7 days. Interestingly enough, beating out Bitcoin. One of the few exceptions here, so really exciting to see this. And again, I'm going to be keeping my eye on Monero because it has a tendency in the past to make really good solid 2 to 3x moves against Bitcoin. That's what we've seen in most of the altcoin cycles. So it might be that a lot of people are looking for a private play like that over the next month or so. Now, I want to spend some time to focus in on this topic of discussion, guys, talking about Bitcoin coiling in price. Now, we've obviously discussed about this for a while. You guys know I'm always searching for wedges in the market because as simple as they are very powerful. But there are a lot of respected people, for example, like Raoul Paul, for example, who's the same way as me, who doesn't overcomplicate TA. We look for the simple price indicators on the chart. We look for how price is interacting. We look for those lower highs and those higher lows. And that eventually leads to a coiling of price, where eventually you're going to have a major breakout to the upside or breakdown to the downside, to usually either test towards new highs for the breakout or to test down to previous support in this case, right? Okay, so what are we looking for here? Well, we obviously I have two different support lines here, because I know, honestly, guys, TA is very subjective, and people always talk about, how do you draw your support lines and this and that. Either way, even if, for example, some of you might consider that we broke down out of the line here, in general speak, we're still continuing the wedge here, right? We're still seeing price coil in here, respecting this general range of support here. This is where buyers have continuously come in. They've come in at higher levels, and they're also selling at shorter term range levels here, right? The highs are getting lower here from back towards our high back here at 13,800. So this inflection point here that's really building up, no matter if it happens tomorrow or if it really happens here in the next week here in early to mid-September, right? Doesn't really matter. What we're hoping for is waiting to see if we can get a confirmation on what way it's going to pick up. Is it going to close above these lines, maybe get to for example, around 11,500 and continue higher, hopefully up past the previous highs here in the short term, and hopefully up to 20,000? Or are we going to see a breakdown back down to the 200-day, maybe testing this support range back here, right? I'm open to both possibilities, guys. The reason I say that is that you can take a look at how we've responded this year in markets, and some might make the argument because we've moved so fast that it's time for us to have a cool down, that we need to come down. But at the same time, you can make the same argument where it's like, look, with this kind of momentum, I'm going to follow the trend, and the market is moving up quickly, so I'm not going to miss the train, right? I think that's the mindset that a lot of investors have, and that's kind of what I've been trading off of, which is why I've been averaging down at this lower range here. My 30 to 40% range that I was looking for, I got it, and I averaged it multiple times when price would go back down into that corrective range from the relative high, right? So again, that's something that's very subjective, and I don't want to use that as my point of philosophy. What I do want to use as an inflection point, kind of fundamental catalyst here, is backed. Now today, we had a transaction come through of over $1 billion worth of Bitcoin to an unknown wallet. Now, in due time, to be fair, guys, it is speculation at the moment as to whether or not this is Back's address. So I just want to be completely transparent with you guys. I don't want to FOMO or FUD or spread misinformation, but there is some decent association in this case that it might be Backed, because Backed opened its warehouses today, right? It's on the 6th that they open their warehouses. And in the next few weeks, they are preparing to launch the physically settled Bitcoin futures contract. So this makes decent sense here that this would happen on the 6th, right? They've been preparing this stuff for a while. It's the official launch date here in the sense of opening up the warehouse to start storing inside their custodial solution, right? So again, in this case, we've obviously got a lot of Bitcoin moving and a lot of anticipation either way outside of just the Bitcoin. We have a lot of anticipation from a lot of investors, both retail and institutional, to be able to trade on these things. But it's going to be a question of whether or not this is a lot of hype or actually is very sound and fundamental to the cryptocurrency ecosystem. Are we going to see people actually trading these, tens of thousands of Bitcoin if they are going to an address hosted by Backed, right? Even if we have this Bitcoin out here, is there really the demand in this case for people to trade? I think honestly it's quite telling that they're sending this much Bitcoin over, that there is some serious demand here. And the sheer fact that it's open to a wide range and a wide audience of individuals, of different traders, investors, whatever it may be, this is going to be pretty big. I think it's going to be a pretty big thing for Bitcoin. It's just going to take time. It's not going to be as instant as people expect. But I do believe we could get a FOMO breakout in this case. I know that's kind of like a generic term here. I believe we could get some kind of form of breakout from the anticipation of coming into the launch for Backed here. I think there's more anticipation than pessimism in this case. So very interesting thing to watch, guys. Again, what's nice about the blockchain is it provides a lot of transparent data to us, right? We can see value exchanging over the network. And quite frankly, speaking on a more fundamental tone, guys, if we're talking about like major money managers here, I think a lot of people, even though U.S. equities, for example, have been probably producing some of the best returns comparative to other equity markets, I think in US markets, people are very anticipated to look for some hedges, because as much as this might look good in the sense of these, last few months, we're still upticking towards higher highs here after these monthly swings on the S&P 500, on the NASDAQ, on a lot of indices. At the same time, I think what's really drawing a lot of people's eyes is gold. Gold has had a 34% rally over about a year period. Silver, take a look at silver's chart. Huge upswing here within the matter of a few months here, from June of 2019 here to September, right? And it looks like we're really setting up for the next trend here. We're breaking out for the next kind of level here, right? And then eventually we'll come up to 21 here for silver, become with a correction, and then eventually I think break out to much higher levels, right? That's the idea here. So anyways, I'm not going to do much traditional market analysis today, guys. I want to go ahead and run through some other bits of news here. Binance is launching their own native stablecoin, so they're going to have BUSD, and this is in cooperation with Paxos. So to my understanding, this is basically just going to be a branded stablecoin that they're doing again with Paxos here. And you get a variety of different trading pairs that you can utilize BUSD for, from cryptocurrencies like Bitcoin to Binance Coin, as well as XRP. So they actually got approval from New York, in this case, the New York State Department of Financial Services, the NYDFS. God, there's so many organizations and acronyms. You guys know I'm not good with it. But again, it's a very important thing here. I love seeing more competition in stablecoins, but I don't see this as a big revolution because they're working with Paxos in this case. Paxos already has great systems in place, in my opinion. So I think it's just more of, again, a branded stablecoin. All right, so taking a look here at the overall market, we can see here across most indices, the global economy picking up here in the sense of equity markets, with some possible resolution to the China trade war. We will have to see in due time. You guys know we're not trading off of equities at the moment, but we're keeping an eye on it. Now, I do want to talk a little bit about how China is proving some serious signs of weakness here, and that they're utilizing all of the weapons they have in this supposed trade war going on, right? And that is that China has ratcheted up stimulus, and it's cutting its reserve ratio to the lowest level we've seen since 2007. Now, what does this mean exactly? What does it mean for China to cut its reserve ratio? So to be very clear and explain it simply for those of you who might not get it, China's reserve ratio, or the reserve ratio of any country, is the requirement that a central bank sets, or central bank or government, really in this case China, central bank and government, same thing, right? Very controlling over their central bank. It's the reserve ratio is basically the required cash reserves that a bank has to hold, a commercial bank, on the top of the credit or money that it makes, right? So if you guys might not know, the vast majority of money is digital. And it's not just digital because the Fed sends them digital dollars. No, the Fed usually will print cash and it'll lend it out to banks. But the thing is that banks can actually create money on top of money through the form of credit, right? So when you go to the bank tomorrow and maybe take out a mortgage, or you take out a car loan or student loans, the bank is not physically taking that money from one person's account and putting it in your own. No, what they're doing is they're going to print money out of thin air through fractional reserve banking. And the only thing that they have to make sure of as they create this new money is that they maintain a specific ratio. And in many cases, that can be very small. In certain countries, it can be double digits. Sometimes it can be as small as 5, 3, 2, 1, 0%, right? So sometimes there's practically near 0% required reserves for reserve ratios, right? And I don't want to spend some time really diving into what China's is right now and comparing that between countries, but I do want to talk about how they're dropping it by an average of 0.5% to 1%. Now, that doesn't sound very significant, but we'll see just how much that is. So the cuts here to the reserve ratio that are going to be effective, there's two different dates here, September 16th. The two of them are October 15th and November 15th. This is going to release 900 billion yuan, or $126 billion of liquidity into the system. This is going to allow them to create this new credit into the economy, right? And the reason why is, again, that reserve ratio is dropped. So more credit can be created in this case. You don't need as much cash in the underlying system for the credit you're creating. So $126 billion. And this is going to affect not only, again, commercial banks, general commercial banks, by giving them 0.5% in this case of less reserve ratios that they need. But along with that, there's one where I think it was larger commercial banks are going to get an entire percentage point cut that is going to allow them, again, this is it right here. The People's Bank of China also cut the reserve ratios by 1%, 1 percentage point for some city commercial banks. So again, highly centralized. They get to pick and choose what banks get an entire percentage cut. And they're doing it in the major cities because they know, again, they want to keep the base of their economy thriving, right? So here's the thing. A lot of people would ask, is this a good thing or bad thing? In the short term, yeah, it might stimulate Chinese markets, right? It might prove effective for China's trade war to keep its export economy good. Because in the long term, this is really devaluing its currency. And this has been something that China has been known to do for a very long time, predominantly and purposefully devaluing its currency. We have price action here that determines between the US dollar and Chinese yuan pair that China has historically done this. It is a predominant currency manipulator. And it's doing this in the short-term ambitions of keeping competitive in export economies as new tariffs come on board. But the fact of the matter is that the US can keep tossing tariffs on for a long time, right? And as much as China is trying to compete with those tariffs and it's trying to combat those tariffs, inevitably, in the short term, it still might be able to help fight out against those tariffs. What it's going to do is it's going to diminish and have a much more longer-term effect, a negative long-term effect, on the purchasing power of Chinese citizens. Because in the course of a few years, for the Chinese yuan to go from a ratio of 6 to 7, it might not seem like much in a market where we're trading, cryptocurrencies and we're trading things that are moving, 2, 5, 10% in a very easy and short time frame. But when you're talking about the purchasing power of an entire economy, when its currency has been devalued by 1/6 of its original purchasing power, that is extremely significant. And China is slowly but surely dismantling its middle class by doing this, the booming middle class that it's had. So it's going to have much longer term effects. And maybe China realizes that. But perhaps they're willing to take that pain in the short term. Who knows? I'd love to know what you guys think down below in the comments. That all being said, guys, let's go ahead and dive into the interview with Jakob.
What's going on, everyone? My name is Nicholas Merton from DataDash, and today I'm very honored to be sitting here with a close friend of mine who I've gotten to know over the last few weeks, and that is Jakob, who is the head of Hubii, which is aiming to bring a variety of different technical solutions to industries, including blockchain technology, and is aiming to build a very prominent scaling solution for the cryptocurrency ecosystem. Jakob, thank you for making the time. It's a pleasure to be sitting down and talking with you.
Thank you for having me.
Oh, it's my pleasure. And I think there's going to be a lot of interesting topics to talk about in this interview. The first thing I want to, kind of get an idea of here for everyone who's just learning about you as an individual and Hubii as a company is really what you guys are aiming to do. But not only that, where have you come from? What's your industry background experience? Because I think you've got a very interesting story to tell that a lot of people might not know about.
Absolutely. So we're a 12-year-old company from Bergen, Norway, on the west coast. We have a background in content aggregation. We did that for many years. We work with some large companies like Telenor, which is a very important telco. We work with Mozilla. We work with Panasonic, CTE, Alcatel. We were serving close to 50 million users a day by delivering content to them. And one thing led to the other. We ended up learning quite a bit about the content industry and the pain points. And approximately 2.5 years ago, we started looking into blockchain as a technology that could help us to leverage our knowledge to fix specific problems. In terms of the team, we are 8 of us working full-time in the company. Morten, the CTO, and Jan Siever, the Chief Science Officer, and myself, we have been working together for over a decade. And then we have an individual in Xiamen who brings very good blockchain experience. We have 2 more developers coming as well from the oil and gas industry. And then a PhD in game theory and a gentleman in Thailand who has been working around scalability since 2013 with Bitcoin.
I definitely want to dive a little bit more into the team later on and get some more background, because I think you guys have a lot of traditional industrial and kind of enterprise experience, and you're bringing that into something that I think is a very big problem in the crypto space. Now, I obviously, as you mentioned here, you guys went from focusing on content aggregation, and as you and I kind of talked privately over the last few weeks, we've learned that the focus of content aggregation is not a very profitable solution in this case. It's very difficult to build something like that at scale and really monetize. And you guys decided to prioritize focus as a company towards focusing on building a blockchain solution in this case to help scale blockchain networks. And I know you're starting off with Ethereum through your solution Nami. Now, this is going to be, in the longer term, if I'm correct, it's going to be a multi-chain scaling solution. You're hoping to help scale all blockchains in the long term, but you've obviously focused on prioritizing Ethereum here. So I want to get an idea of a very quick rundown as to what Nami is, and then we can talk a little bit more about the intricacies, because I think it's very difficult to solve what you guys are trying to solve, which is the blockchain dilemma.
Absolutely. So what Nami is a protocol to scale today the Ethereum blockchain. So the protocol itself, Nami, is already built and it is deployed in mainnet. We deployed it about 9 months ago. It was deployed to Robson, to testnet a year and 3 months ago. And what we have done, different than other companies, is we have taken a wider approach towards fixing scalability. So what I mean by that is that most of the other projects exclusively focus on TPS, transactions per second. But our understanding is that to really achieve a product or building a product that is commercially viable, you need to fix many other things, like not only the throughput, but also the latency and the finality of the transactions, and also the fee predictability. This is as a bare minimum. Then another angle that we take is we have built Nami in a way that it is pretty much generalized. So yes, today is built on Ethereum, but we can port it, as you have said, to other blockchains, and we can talk about that in a minute as well. And finally, as well, we have built a set of developer tools, which in many aspects is also part of scaling the product. It's maybe not about throughput, but it's about scaling the adoption of the protocol, right? You need to have the right tools in place so people can actually use it. So they don't need to go through a 3-year learning curve on how to understand how a blockchain works. So all that combined is pretty much what we have done the last 20 months. And again, the result is already available on Ethereum mainnet.
I really like the points you brought up there, Jakob, in the case of the fact that there is more factors than just TPS or transactions per second. This is what so many, I think, ICOs and blockchain projects came out saying that, well, we're going to do this kind of throughput, this and that. And usually they couldn't produce that kind of throughput in the first place. But also, it's not the ultimate type of, scalability that people are looking for. There are other things, as you mentioned, finality. If it's going to take me 20 seconds, and I also don't have a guarantee on what fee I'm going to be paying on the network, I mean, for a certain set of transactions, let's say, when we're talking enterprise level, that can be very scary for a lot of enterprise companies to go, am I going to use this blockchain solution? And then you also mentioned something as well, which is providing the proper development tools. I see a lot of the scaling solutions coming to market and they don't really have the ease of use for developers, and also, again, remove that learning curve to be able to really get exposure out there to, pre-existing companies right now who, again, we're expecting are going to adopt these blockchains. But I want to dive into the technology itself. Nami really seems interesting to me. And I like, for example, from my understanding of the technology, how you guys utilize not only a solution that is non-custodial, okay, very big important part of this compared to a lot of scaling solutions, but along with that, you guys use a variety of oracles in this case in order to reach consensus on the network. So I'm really curious. I want you to take it away. I want to hear a little bit from you, Jakob, about how does this actually work behind the scenes without overcomplicating it too much?
Absolutely. So first of all, you have touched upon a lot of really interesting points, and I will try to go first of all about the protocol and the architecture. So Nami is what we call a layer 2 solution. So we use, in one end, we use the Ethereum blockchain, in this case as an account management, if we can call it that way. So we have a bunch of smart contracts. As you have said, it's non-custodial, meaning that you can deposit money into the smart contract. We, as a company, we're not holding your money. And then we have the other part of the code base, which is a layer 2. And this is where, again, we can perform fast transactions and all the other parameters discussed before. Now, the second layer, it is today centralized. So, and we're pretty transparent and honest. Yes, it is. We can also say, though, that we have a clear path towards decentralization, and we can cover that as well. Now, when you build a layer 2 solution, and there have been many attempts, it's one really big problem that people has not yet been able to fix. And the biggest problem is that you lose the trustlessness, right? Because if you deposit money into a smart contract and then you're going to run in a server that I control in quotes, right? You really don't know, me as an operator, what it's doing. So, for example, you might be performing transactions, but I might decide as an operator to stop broadcasting that data, right? So this is the biggest problem, and it is called the data availability problem. Now, What we have done, though, that other teams have not been able to achieve, is to fix what is called the data availability problem. And more importantly, we have also filed a patent. But now let's go into the Oracle, as you have said before, right? So back to the same use case, you deposit 10 ETH, then you would like to perform a bunch of fast transactions on Nami, and then you would like to withdraw money. Now, for whatever reason you think that we as an operator, or in this case, the operator of the protocol, which today is Hubii, indeed, has to stop broadcasting data, well, then you can most definitely solve that conflict through an Oracle, right? So for every transaction that you perform, it is going to be signed by you, your private key, and also the operator wallet. And every transaction is going to have nonce, so you will be able to see if at some time in the broadcasting of transactions, one of them has been stopped from being sent to you, right? Mm-hmm. So in that case, the operator might want to withhold data with the sole intention to steal your funds, but then you can go on chain to the Oracle, and then you can actually submit your receipts to figure out if we have really stopped broadcasting the data or if not, right? So if people can stake tokens, which is the lead token, to figure out if fraud has been committed, and if it has been proven that fraud has been committed, the protocol will come to a halt, and people will be able to withdraw their money, right? Mm-hmm. So this is in super simple terms how the data availability problem works. So if you have a central operator and it stops broadcasting data, then you really don't know if that guy is committing fraud. Of course, we have public APIs that will be broadcasting the data. We'll have multiple operators of the protocol checking out that the operator is not committing fraud. We'll have bots sniffing the data to make sure that all transactions are being broadcasted and so forth. So the other part of your question was that many people claims to have fixed the scalability issue, and in essence, I can tell you that fixing scalability is hard. Mm-hmm. This is not a trivial problem, right? So in one end of the scale, you might have companies saying, well, I've created this new blockchain and I can do a gazillion number of transactions per second. What we're talking about here most likely is a little tiny script that, yes, can be writing to a Mongo database in a centralized server, but there is nothing magic with that. That can be done by anybody, right? Some other people will claim that they are working on fixing scalability on the layer one, and that might be true, but it is utterly complex. And you might have some other projects with a lot of money that are working on scalability that are only focused on TPS, and they have some really big flaws in their designs. We have, again, tried to take a more holistic understanding, and that's what we have built.
Yeah, I mean, I'll build on this later on. I think you really have taken the previous institutional experience that you guys have for the last decade, and like you mentioned, you've been working with your team for a while on fixing a lot of these big issues over the last decade. I think you're taking that full-scale mindset that a lot of people, as much as we have a lot of new, young and ambitious developers in the crypto space, a lot of them don't take that traditional kind of mindset into account when they're trying to build these very complicated solutions. And I like the Oracle in the sense that it kind of serves as a check and balance in this case in order to protect people in case they have a distrust in the system, in case there is some kind of dispute or some fault in the system. So I think that it's a very interesting, again, kind of multi-layer level of security to make sure the scaling solution actually works as intended. And, kind of building on this as well, diving into some other things. I know that you guys have obviously been focusing on Nami in this case. This is kind of your bread and butter of what you guys are trying to build out right now. But what are some of the other things you're trying to focus on? I know you had kind of handed away from doing just simply content aggregation, but I understand from at least the research that I was able to do, you guys are trying to build out a full-on ecosystem here for Hubii as a company.
Yeah, and thank you for the question. So today Nami is available on Ethereum, and what we will be doing next is porting Nami to other blockchains. So when I was describing in general terms the architecture of the product, so you have some code which consists of the smart contracts and some code which is the layer 2. And when I was said earlier before as well that the architecture we have taken is generalized, what we can do with architecture is port the smart contracts from Ethereum into, for example, Bitcoin via Rootstock, Rootstock is a team in Argentina that has ported the Ethereum virtual machine from Ethereum into Bitcoin. So now you can develop the smart contracts into the Bitcoin blockchain. So again, we could take our smart contracts and pour them into Bitcoin via Rootstock, and then we would be able to breach Bitcoin and Ethereum. And that is what we're going to be doing. We will start probably in early October. Funny enough, I've just walked out of a conference call speaking with Argentina. And equally, we could do the same. For example, we could also port the smart contracts to NEO or to Libra, to other blockchains as well. And then on the layer 2, we will be able to perform, for example, atomic swaps between all these different blockchains. Now, please go ahead.
No. So just to make clear, in this case, you guys are not only fixing scalability, but you're bringing a form of interoperability on this layer 2 solution. So that's really fascinating. I mean, you're fixing 2 of the major problems in the cryptocurrency space through a very secure second layer solution. And I think that's very exciting because obviously I want to see other blockchains scale as well, but also to be able to finally communicate and conduct atomic swaps. I think when you get that, you're removing a big need for exchanges. You're removing a big need for, again, these overarching centralized entities to actually conduct transactions, which I think is really exciting.
It is, and it's also very powerful because as with most technology plays happen, there will not be one blockchain that will win the entire market. You will have 5, 10, 15 different blockchains. And as time goes by, they will become more and more powerful in terms of the feature set that they provide you with. So, which also implies that different industries might be using different blockchains for different purposes.
Right.
So if you could have that seamless layer to access any blockchain that you wish through the same interface, that is a big, powerful thing. Mainly because we'll allow the flowing capital from other blockchains into your blockchain of choice, right? And we do believe that we are very well positioned to achieve that.
Well, Jakob, I like the point you brought up about how there's not only going to be multiple different blockchains. I always build the analogy that right now, for example, we're not just using the standard protocols that make up the internet. We're using other protocols like VoIP. We're using voice over internet protocol to communicate. There are so many different protocols that specialize at certain things. And to think that companies are just going to falter to one blockchain, I think is quite closed-minded, and that's where we have room for some other competitors to come. And I think that's really good on your point. But I want to build this into another question I think that's important with any kind of scaling solution. You guys are claiming in this case to have built the solution for enterprise, and I'd love to hear what are some of the kind of partnerships you're building. I know that previously Hubii has landed some big partnerships, as you alluded to, with telecom companies in Norway and a lot of other areas. So what are some of the kind of partnerships you guys are working on right now to get not only Hubii as an ecosystem into the hands of companies, but also Nami specifically?
Absolutely. So I can talk to you about 3 of them. A couple of weeks ago, we announced that we have the first foundation member for the Nami Foundation signed up, and this is MBX. MBX is a upcoming cryptocurrency exchange and payment network that is located here in in Oslo, in Norway. They work together closely, and they're a spin-off of Norwegian Airlines. And they have a very clear use case for Nami as well, which will be disclosed in detail on the 12th, but it's got to do with payments. Now, when I said it will be disclosed on the 12th, which is the next week, is because we will also be open. Yeah, we will speak publicly about the partnership we have signed up with Microsoft. So Microsoft is going to help us greatly on going to market. So we are still a very small company, so we have very limited resources. We cannot go and sign up 500 customers next year.
Right.
But with the help of Microsoft, potentially we could, right? And that is what we're after. So Microsoft is clearly going to help us, hand-holding us to get a big share of the market. And then the third partnership is with Liquid Exchange in Japan, formerly called Coin. And we will be doing a token sale for the NEO tokens in 2 weeks' time, on the 18th of September.
Awesome.
So,
I mean, this is some big companies and stuff, but I think that, again, partnering with good exchanges, again, like, what I was thinking is the original in Coin One and stuff, but now it's Liquid. One of the more prominent and actual liquid exchanges in Japan. That's good to see. And as you mentioned as well with Microsoft, this is the same thing I brought about with Chainlink, which is actually an Oracle solution project in the crypto space, and their partnership with Google. I've said that it's going to be scaled through a lot of these larger enterprise companies, and a lot of people won't know that you're running it through a solution that maybe you guys have created in this case. There's a lot of, I guess, software as a solution companies like Amazon, like Google, and Oracle that actually provide these services. And as you mentioned with Norwegian Airlines in this case, which is one of, I guess, the low-cost airlines that are out there in the market, when you're working with low-cost airlines, it's a perfect business model for something like you guys because you're building something that can help provide fast throughput and low fees. So you're helping to reduce those costs that, again, those transaction fees on debit cards that can eat up 2 to 3% on your overall business margin. So I think that's really awesome that you guys might be able to be a prominent solution for them.
Absolutely spot on, and many of the corporates out there are constantly looking at what technology can I use next to fix any of my existing problems, right? And sometimes it comes down to precisely what you just said, which is how can I reduce, all these $100 million of fees that I might be paying to this or to that company, and blockchain is where it comes into place. Now, being able to work with a company like Microsoft as well is going to help us greatly. And reason being is because although you are big time into the industry, and so am I, 99% of the corporate world isn't. So when they hear about blockchain, it's these really bizarre black box that I don't even know how can I use it and why do I need a Bitcoin, right? That is the first thing that comes to their minds. But we will be able to translate that super geeky language into tangible use cases that companies can immediately benefit from, and they can use maybe 15 lines of code to accomplish, implementing a specific step in the process that otherwise would have taken them 3 or 6 or 9 months of development.
I absolutely love that. The simplicity of being able to plug it in kind of like an API, just simply being able to integrate this technology, a few lines of code. And like you said, having the respect of Microsoft, but also being able to translate it in their corporate language and just getting an understanding of how this could actually add value to the business work. I 100% agree with you.
Yeah, I mean, and with regards to Microsoft, the first time we engaged with them was in December last year. So it has taken us a fair amount of months to get to business with them. So we have gone through multiple levels of due diligence as well. So we feel quite proud about this opportunity, and we're certainly going to dedicate a lot of our efforts to it. Yeah.
Well, that's awesome, Jakob. So, we were talking about, obviously, you didn't get here overnight. You guys have been working for some time on the scaling solution, and I'm really excited to hear that you guys have these kind of partnerships. I'm curious, to learn a little bit about the team, because I think it does take a solid team to deliver on building something so important, such as a scaling solution for hopefully multiple blockchains. I'm curious, you were mentioning a little bit earlier about your diverse range of team members and stuff. They're in all different precincts of the world, in different areas, and specializing in different focuses. So perhaps you want to spend some time maybe talking about, who are your aides on the side of you who are helping you fight this battle of scaling blockchains?
Sure. So Morten and Jan Sivar, who have been, I've known them. I started working with them 13 years ago. I also come from the oil and gas industry to a lower degree. Morten, I think, has been for 20 years, and Jan Sivar pretty much the same. But we met each other working a small software house here in Bergen. We built a rather large and complex system for Chevron in San Joaquin Valley. So they did have a $500 million problem in terms of maintenance for a specific onshore oil field, and we managed to reduce the maintenance by 5%. So wow. They saved $25 million a year, and that was on I think it was 42 square kilometer oil field with 16,000 wells between injection, and so it was a lot of fun. But Morten and Jan Sivar, they have been around engineering for about 20 odd years, the same as me. I've been for 25, and we have two other guys as well coming from the oil and gas industry that worked with Morten in the past, Slombashe, John Christian, who is in Portugal, and Eric, who is also here in Bergen. And then we have another blockchain developer who has been developing systems for some time, I think 15 years of experience, Kata. And then we have a PhD in game theory who has been instrumental in the design of the Oracle. That is kind of his bread and butter. And furthermore, we have Mark, who is in Thailand. And Mark has been around blockchain since 2011. And as mentioned before, working around scalability, initially for Bitcoin, since 2013. So it has been a combination of all blood. So Morten, Jan Sivar, and myself, we have known each other for a long time. We have built systems. So we kind of know the drill. But at the same time, we have also brought in a lot of fresh blood with very different, very powerful mentalities in terms of how things ought to be done. And keep in mind, we did not know anything about blockchain when we started, pretty much, right? Mm-hmm. So, but it has been that combination of knowing each other for a long time and having built complex systems and having pushed each other for a decade now, together with a new mentality on how to build scalability solution for blockchain that has helped us to deliver Nami on pretty much on a timely record. Keep in mind as well that when we started building Nami, some of the teams around building scalability had been building for over a year, right? So we had a lot to catch up with, but we still bid them to market, which is kind of kind of ironic.
No, I think you put it in a really good way, Jakob. Having a mixture of traditional legacy enterprise employees as well as those who, like you called, fresh blood, who are kind of, knee deep in the cryptocurrency space and game theory, blockchain and cryptocurrency solutions. I think you need a hybrid of this because, as we mentioned earlier with Microsoft, what a partnership like that is going to do is it's going to help scale you to enterprise who don't know a lot of the techie kind of wishy-washy philosophy of cryptocurrencies and blockchain, which I think is all great and all. You and I understand it, but to actually have it where we can get people who have worked in the traditional space like yourself, who understand how enterprise solutions look, feel, and work, to be able to make it where your solution is going to be comparable for those companies, I think is going to be extremely important to actually getting a scaling solution out there. We can kind of sit on our ivory towers and say how great blockchain and cryptocurrencies are, but until we actually make it usable for corporate enterprise, we're not going to extract all that value that we know we can actually eventually bring.
Absolutely correct, and I cannot stress enough the point that building systems like this is actually very, very, very difficult. And the more I learn about what we're doing and how we're doing it, the more complex I realize it is. So I'm not very skeptical by nature, but having worked in this industry has made me very skeptical about pretty much everybody else claiming to have fixed the scalability doing this or doing that. No, it hasn't really been done so far. And what we have done, it is good. It's absolutely more than good enough for now, but it is going to keep on evolving, and we have an awful amount of work ahead of us. It is complex, but it's a lot of fun as well. So, and we would not have been able to do it without the mixture of the 25 years of experience building systems and the brand new mentality or understanding of how to scale a blockchain. And again, Mark has been instrumental.
Well, Jakob, I not only like that you're, again, championing your fellow coworkers. I think that's a very important thing to understand, that it's a mixture of a lot of different mindsets that usually can bring solutions to the table. But along with that, to have that kind of critical mindset that we've got a long way to go, I think people get way too comfortable in this space, and people are too eager to make claims very quickly in the crypto space. So I like how you guys are, again, on a vigilant mindset of trying to continuously improve, not having the ultimate solution ready today, and continuing to, again, build out the best solution you can until we get mass enterprise on board with this, whether it means scaling through existing companies, building a solution, again, that's going to provide more trustlessness and actual throughput and scalability, in this case, for transactions and for enterprises to actually get value out of it. So I'm really excited to see where you guys go. I know that I want to have you back on, Jakob. This has been a really interesting discussion. Help clear up a few areas and stuff that I was curious about in the sense of my research on what you guys are doing with Nami and the rest of Hubii. So if people want to learn a little bit more about what you guys are doing, where should they go? Where should they go to learn a little bit more about what you're doing and maybe get engaged?
I would go to the Nami website, nami.io, and if that's okay with you, I can provide you with all the links.
Absolutely.
So you could add them to the video. Also, I would direct them to our Medium, Hubii Medium, which I will also provide you with. And also, we have a pretty good Telegram group. It's very small, about 1,500 people, have been with us for pretty much since we started 2 years ago. But really, really cool guys and really cool characters in the group. Very knowledgeable. I'm really impressed, and I learn from them pretty much every day. So those would be the three best ways to learn more about the product, what we have done, and also our community. And of course, we are very approachable, so they can ping us anytime on Telegram, and we'll be quite happy to share knowledge with them.
Well, that's awesome. I think you guys have got a great community for a project, again, who's kind of had their head focused in on the work rather than trying to excessively market and make, bold claims like a lot of the projects out there in the space. It's a really refreshing thing to see. And as I said, Jakob, I'll leave the links down below in the description. I hope you guys will get engaged with the community. You don't need to be a big enterprise individual to get engaged with the team at Hubii and get involved in Nami at all, guys. You guys can test out yourself, talk with the team, and they'll provide all the resources for you. But Jakob, it's been an absolute pleasure. Thank you for coming onto the channel. And as I stated, we'll have to have you back on in the future.
Thanks so much. It was my pleasure.